back. It's been a day since we last met. Today is Monday, September 16th. It's a bright and beautiful day today, and I'm back at it to, review what I've done today, trading NASDAQ, what I did to see that outcome, talk through my mentals and my technicals during that trade. I want this channel to not just be about the technical aspect of trading, but also the mentals. So what I've realized in the past 2 years is there's a lot of things that are factored into your trading. One of the main things is the mental ability to objectively, trade, objectively view price action. Of course, there's a lot of technical competence that you need, a lot of skill set that you need to build, even talk about the mental aspect of it, but mental and emotional carryovers and how you deal with them play a big role. And I spoke about this yesterday. We reviewed a ton of my trades from last week and where I ended up being, and today, starting off, I'm still continuing that streak. I had a loser today. The goal is not to be bogged down by what happened, this single outcome, but look at it objectively and see where I'm gonna end up in many more trades. As long as I'm executing on my trade with the highest level of composure and sticking to all of my rules, the monetary outcome is not what defines a good trade or a bad trade. You as a trader sticking to the rules that you have for yourself to execute on this free-flowing information in the markets is what that proves a good trade or a bad trade. So with that said, I'm going to continue to look at them objectively. Let the emotional aspect, emotional carryover be a small part in the next trade. I'm not a robot. I'm going to have these emotional carryovers, and especially after this streak that I'm having. And I'm going to be transparent with you guys. I'm not going to sugarcoat it. I want this to help any aspiring trader out there, that we all go through this, and the only thing that can help you get out of this is to concentrate on executing at the highest level and let the emotional carryovers be a small part in your trading. I must say I'm guilty of charge today. I said what I had to say yesterday. I said the emotional carryovers are not going to be, try to not have emotional carryovers, but I had them today. There was one trade that I'm going to walk you through that I could have executed on, but I didn't because I wasn't convinced that it was an A+ setup. Hindsight, if I had a couple of winning trades, I'm just going to let the plain pass. So I'm guilty of charge. I said I'm going to try to not let that emotional baggage or emotional carryover deter me from being objectively receiving the market's information. But I didn't execute on a trade, which I would have if I had a couple of winning days. But in hindsight, that was a risky trade. Though every trade is a risky trade because you're going to put risk on it, this especially was risky, seemed risky more than usual to me because of my losing streak. And that's the emotional part I'm talking about. That's the emotional carryover I'm talking about. We gotta come back to baseline, get rid of all the emotions from your past trades. And how you do it is, I'm going to talk about methods that I use in the future, but what you can do immediately is read price action objectively, read price action by being in the moment. That is all there is. You got to take the market's call and you got to execute. With that said, I'm hopeful and I'm very confident that I'm gonna come out of this losing streak, and we'll see where the month takes us. As long as I'm executing on it at the highest level, we're gonna see success. So with that said, let's jump right into the charts. Alright, so we're back to the screens. I'm gonna show you guys what I saw this morning and how I ended up taking a trade and what happened afterwards. So as I came into the morning, Nasdaq was looking quite strong. I saw that the monthly was really turning out to be eradicate most of what had happened in September. The first week was a sell-off. The second week retraced all of the first week's sell-off and closed above where the month had started. So it was giving me an overall sense that the structure was changing and there was potential for an upward move. With that in mind, the weekly seemed pretty strong, and the daily was opening at almost 173, which was below Friday's open and also closer to the downward channel of the past 3 months. So the monthly and the weekly was saying something to me, and the daily was giving me an intention that there was going to be a little bit of sell-off to begin with, and my idea was to capture either direction, whichever had the most conviction, and set myself up for a good trade. And as you guys can see, what happened at the open was the first 5 minute was quite aggressive. It had sold off almost 2 points, and it closed off at the lowest order, and what it meant was there could be more orders underneath it and the market would continue to sell off. I couldn't enter on this. That's not part of my rules, so I intended to wait. What happened next is the market went down a bit, completed those orders, and then retraced back, which again sold off almost to opening price for the second 5 minute bar. And at this point the market was sort of giving me an indication that it's still undecided on where the next move is going to be. As the third 5 minute bar came up, it gave me an indication that there could be more orders above the 472 range, and this was a trade that I could have taken, but what I was going by is the first bar. If you see the first bar, it was quite aggressive in the way it sold off, and the first 15 minute, though it had retraced up half of its way, it still was not giving me an indication that the trend is going to turn upward. It could have been a trade that I would potentially take on another day, but considering the streak that I've been having, I wanted to enter on a trade that I had the most conviction in. So considering that, I was hoping that the fourth 5 minute bar sold off and was closer to the low of the 15 minute bar. But what transpired after that is the fourth bar continued higher to the first bar's open, which in reality changes the structure of what's going to come. And as the fifth bar closed, it closed quite aggressively without a wick. It gave me an indication that it could go higher, but I was being patient to wait for a good swing to enter. And the sixth bar tested higher and came down. At this point, couple of things could happen. The market could make a swing and continue to trend higher, or the market could change direction, considering there's a channel line right above at around 400 and 475 points, 474.7 or so. And the seventh bar consolidated. It tested below slightly around the 172 range, and the eighth bar again sort of was a consolidation bar. This should have given me an indication that there's a bit of consolidation happening and I should have waited for a good within the market. What happened after that is the eighth bar sort of created a change in structure. If you look at what's happening on the 15-minute here, is the first bar sort of sold off, it retraced back to its midpoint. The second 15-minute bar trended up, retraced back to almost its midpoint. The third bar tested almost the open of the second bar and went up to test the second bar's high, and it closed off at the highest point without any wick. So that means there's still orders up there and there could be a potential to run higher. But with all that said, what I should have paid attention to is the channel line that's right above. By this time I was holding about for 45 minutes without a trade. I had already left one on the table, and this was sort of playing in my mind, and I was eager to get on a trade. And this is what a good trader should be doing, is holding on and waiting for the A plus setup to form. At this point I was willing to risk for a potential move higher, because the daily seemed like it had retraced, it had tested the 170 low and was retracing higher, forming a higher low on a daily structure for a move towards the 476 area, testing Friday's highs. Maybe not today, but at least on the way towards that. So what I did after that is, at the break of the third 15-minute bar high, and had placed a stop loss somewhere around 472. I know it had tested the lows of the day and continued to trade higher, but I should have considered a few things: the consolidation and also the significance of the channel line, which was just about 0.8 points away. What happened next was the market took me out at my stop loss, and I ended the day. But what I'm proud of myself is to stick to my stop loss. What I'm proud of myself is to only take one trade. Today the market sort of gave me an entry if I would have entered at the place where I got stopped out, but on another day it wouldn't. So what I'm trying to do is preserve my capital and trade, risking how much I am willing to risk. So this is what I want you guys also to learn, is keep the risk in mind and always manage your risk. It's a pattern recognition and a numbers game. Do not forget the numbers game. It's as important as the pattern recognition. And out of everything, the most important is the mentals that I talked about in the first half of the video. So hope this helps. Let me know what you guys think of it in the comments below, and like and share. Looking forward to seeing you guys tomorrow again. Bye.